I'm Andrew Mair and I'm the Chief Executive of the Midlands Aerospace Alliance, and we're holding a whole week of meetings this week to talk about aerospace unlocking potential related subjects in a bit more detail. Next slide. To remind you, these are the subjects that we're looking at. Christine from the University of Nottingham will introduce them in a bit more detail later on. But we're taking a break from our drama additive hour, which is normally every Tuesday, and our Aerospace UP hour, which is normally every Thursday, but they return next week. Next. Here's our agenda for today. I don't propose to go through it in any detail just now because you've seen it in your joining instructions or in the meeting invitation that went out this morning that drew you to today's meeting. But our main focus today is on finance, matters related to cash flow and capital. We've got our special guest, Robert Thomson from Roland Berger, who has spoken at a number of our conferences and has always received the highest marks from our attendees. So great to have Robert back, and we'll introduce him again in a minute. And then we've got some important subjects to discuss right at the end in terms of support available for businesses with Nic and Christine and Sarah, who will introduce later as well. So over to you, Pamela, for the protocol.
Thank you. So I think you've all been joining, and I think most of you have been been muting. I've got the rubbish lorry coming past at the moment. It always comes past just as I need to speak. In a second, I will mute everyone just to make sure we catch any stragglers, and anyone who's still got their camera on now, who's not an immediate presenter, could switch it off. I think a good few of you have found the chat box and have been adding your full name and affiliation. That really helps us to know who's on the call. We don't see full details of everyone. Use that chat box as well to put any comments about the presentations and questions you'd like to be putting to the presenters. The chat box will not appear in the recording. That we may use clips of, externally afterwards. If we do call on you to ask your question, again, could you just repeat your company affiliation when you start speaking? It just helps us to put that into context. There's now a raise hand function in Teams, which might be useful during the discussion process, or if anything's going drastically wrong technically. And I have a feeling there's something else that I was about to say, but it's gone now. Have I forgotten something, Andrew?
I don't think so. It's all written on here anyway.
Yeah, there we go.
So thanks very much, Pamela. Well, we're going to start off by introducing Christine Koch from the University of Nottingham, who's going to introduce the Aerospace UP programme. Some of you will have seen the slides, but it's important that we remind you of them because there are great opportunities, especially for smaller companies, which you may not be thinking of currently, given the crisis that the industry is in some ways, but could be important to help you in the downturn and the upturn that we're sure will follow. So over to Christine.
Thank you, Andrew. Hello, everyone. Yeah, so my name is Christine. I work as the Business Development Manager at the Institute for Aerospace Technology at the University of Nottingham. Welcome back, everyone who has joined us yesterday on Monday when we were talking about people. And yeah, thank you for joining us today, where we're going to look at finances. So to start off with, to give you an introduction, what is Aerospace Unlocking Potential? Aerospace UP, as we try to call it short, is a 20 million program, a 3-year program. It will go until 2022, which aims to support the aerospace supply chain in the Midlands and to help to unlock its innovation potential. As you can see from the logos on our branding, it's a project that's jointly being delivered by the University of Nottingham and the Midlands Aerospace Alliance. And it's also supported by the European Regional Development Fund, which helps businesses to access funding and expertise to improve their performance through innovation in all aspects of the enterprise. And this funding is secured. The monies are already in Britain, and they're guaranteed by the government as well. So Brexit will not have an effect on it. If I, sorry, I'm just looking at my notes. Yeah, one thing I have to mention is that it's a pan-local enterprise project. So if you have a look at the map we've put out there, those are the those are the 8 areas that are part of the project. So we're covering big parts of the Midlands, and so the funding and all the support is basically available to SMEs that are based in this geographic area. So the way we are thinking about helping the industry and help with innovation in aerospace is through various activities, and some of them are listed here on this slide. So the program will be doing workshops and dissemination events. The event you're taking part right now is one of these events. We've also had a weekly Aerospace UP Hour hosted by the MAA every Thursday morning. That started right when the crisis basically came about earlier this year, and we've been doing that every week. We'll continue with it next week as well. The workshops that we'll be putting out will be more technical, so they will be based around topics such as digital manufacturing technologies or process innovation. So yeah, there are a lot of interesting topics that will be able that will offer support to companies with issues they might have in their operations. The next point here, consultancy services, it's basically an umbrella to encompass all the support that the delivery team is going to offer to you. So we're here to help you to identify and to see what projects basically what projects we can help you with and how we help you with in very different ways. That could be through student placements, for example, from the university. That could be introducing you to academics that work on very specific research areas that you're interested in. We have a whole expertise to help you with other innovation funding, Innovate UK or ATI funding that's available to you. So we can support you with applications in that. But we also have experienced technology managers who will visit your companies, who can help to identify areas where you could, for example, improve productivity. They can help you with technology road mapping. And of course, we're here to help you with just setting up projects for R&D research for the grants that we can give out in the program. The next point here are technical support projects. Those are supported through the university's Precision Manufacturing Center. So we have a team of technicians, very experienced in their field, and a lab full of high precision manufacturing machines that you can access for free. This is funded through the program to help you, for example, produce prototypes or do product design or do metrology reports as well. So if you're interested in these kind of projects, please join us tomorrow. My colleague Daniel Symes will be here to speak a bit more about how they can support you here. And then last but not least, we've got grant funding available for projects. We've got a pot of £5.4 million that we want to distribute to SMEs that are participating in Aerospace UP. And the money is there for you to develop new technologies, new processes and products. I will be speaking more about the grants and the processes and how they work, how you can access them later today. So if I could have the next slide, please. That should show us the just the agenda laid out of the week. So the Aerospace Unlocking Potential Week has, 5 days and 5 topics that we are talking about. And these 5 topics are based on the MAA's 5-point plan, which looks at how to rescue and recover the aerospace industry in the Midlands through the coronavirus crisis. The plan has been developed based on a survey that the MAA has done at the beginning of the crisis. And I'll invite Andrew now to speak more on the survey and why we're focusing on finance today. just to add, we've got a whole range of speakers invited that are appearing throughout the week. They come from the industry, from consultancy companies, but also experts from the University of Nottingham and other partners. And so, I hope this is really a great opportunity for lively discussions and interesting conversations. So over to you then, Andrew.
Thanks very much, Christine. We will be looking at the survey results in a few minutes, but we're going to do that after we've spoken to Robert a little bit and got a bit of background from Robert on how Roland Berger sees the current scenario in terms of the evolution of the crisis in the industry and the prospects for the upturn that we all expect to happen at some point and current scenarios for that. So Pamela, I don't know if you want to put up Robert's slides and then we can move over to Robert's presentation. That's fantastic. So just to introduce Robert again, a partner in Roland Berger, which has a great aerospace expertise, and they've been making that expertise available to members of other organisations, including ADS, our national body, and our friends in the European Aerospace Cluster Partnership as well. Robert has spoken at a number of our conferences in the past, and as I said earlier, always goes down very well for the clarity of his thinking and the way he expresses that. So gives people some good ideas and good take-home thoughts for their own planning in the future. So I was very pleased that Robert agreed to join us today as our guest for our discussion on finance matters. So Robert's going to start talking, I think, Robert, about just giving us a reminder of how we got to where we are and how Roland Berger sees the scenarios for change in the future. Over to you then, Robert.
Well, thank you very much, Andrew, and thank you for the very kind introduction. A great build-up, so I guess it's only downhill from here onwards after that tremendous initial build-up. I think what I'm going to do to begin with is just talk a little bit about what we've seen develop over the last 3 to 4 months of the crisis. And if we go forward to the next slide, we'll be able to see actually one more slide forward than this. We'll be able to see how we've been analysing the development of the crisis. So if we go forward again to page 4, this shows the way in which we've been looking at how COVID-19 has been impacting the industry. And we've been starting off on the left-hand side with the virus progression as it's been transmitted around the world. That then has fed into the mitigation actions which governments, companies, and indeed individuals have taken. That has had an impact on the demand for air travel, which has then impacted the aviation industry, by which we mean airlines. And that then works its way through into the manufacturers and the maintainers of equipment. So down at the end of the chain, we look at both MRO and drop in aircraft production. On the left-hand side, we've been working together with our healthcare team within our global organisation. And towards the middle, we've been working with our airlines team. But what I was really going to talk about today was more towards the right-hand side, which I think is of greater direct relevance to the MAA membership. I can answer questions to some extent about the virus and about the aviation industry, but I'd have to say some more detailed questions I might need to defer to my more specialised colleagues in those particular areas. So if we go forward to the next slide, this slide looks at passenger volumes, year-on-year change in passenger volumes. And what we've seen is that passenger volumes in China, up until very recently, have been on the rise, but remaining significantly below 2019, whilst air traffic in the US and Europe has continued to suffer. Chinese air passenger volumes are the purple line here. So you can see that volumes fell very rapidly in mid to late January, around about the time of Chinese New Year. And volumes were down 93% year on year at their lowest point. Up until the end of last week, volumes were down only 39% versus last year. And some of you may notice that this chart doesn't actually go fully up to date. We have been trying to get the most up-to-date data from China on passenger volumes. And what we've noticed is that Chinese authorities, the Ministry of Transport in China, has stopped publishing the latest traffic statistics at a time that just happens to coincide with the second outbreak in Beijing. Whether the cessation of publication and the outbreak in Beijing are a coincidence or whether the two are linked, perhaps leave as speculation for others. But we have noticed that the latest statistics haven't been appearing on the Chinese website. And we've been trying to get the data through the back door from our offices in Beijing and Shanghai, so far with no success, unfortunately. The two blue lines are US and Europe. So the darker blue is the US, where we can see US fell was about 96% down year on year at its lowest point. And as at around about the end of last week, down a mere 85%. The interesting thing about the recovery in the US is that we're seeing low-cost airlines like Southwest putting much more capacity into the air than the network carriers like United or Continental. I think our view on why that is happening is that the larger, more network carriers have the drag from their intercontinental side of their business, which is clearly suffering since domestic travel has begun to return sooner than intercontinental travel. And secondly, the network structure of the network carriers is such that they rely on an element of feed and defeed from their hubs for the international traffic. And obviously that feed and defeed doesn't exist, and therefore they have less traffic. One of our overall views on this crisis is that the low-cost airlines are going to be the ones which win. So the likes of Southwest in the US, and then within Europe, the likes of Wizz, Ryanair, and EasyJet. EasyJet having started flying again last Monday. So traffic in Europe still remains down considerably on last year, though I noticed from my office window where I am, you can see the odd plane coming into Heathrow nowadays, which you perhaps didn't see 3 or 4 weeks ago, but still traffic down 95% or so in Europe compared to last year, which is a pretty tough outlook. If we then go forward to the next slide, here we've looked at the proportion of the fleet which has been grounded, and consistent with the slight recovery in passenger traffic, we can see that commercial aircraft groundings have begun a very moderate recovery, having bottomed out in mid to late April. So on this one, the grayer line is China, which fell first. And then, as of the latest data, was down about 36% of the fleet in China was grounded. So consistent with the recovery in passenger traffic. And once again, the latest data on groundings has proved to be a little bit more troublesome to get from China. The overall global average is the purple line on this. So as at the 22nd of June, about 55% of the global fleet was grounded. And you can see in Europe, which is the darker blue line on this slide, more aircraft grounded still within Europe than in North America. And obviously groundings have a very considerable impact on the aftermarket, which I'll come back to in a few slides' time. If we then go on to the next slide, airlines around the world have begun to plan to increase operations throughout 2020. And on this slide, we've picked the major carriers in each of the different regions. And the darker the blue rectangles, the more complete schedule each carrier is operating. So you can see in Q1 2020, most airlines were operating pretty full schedules, with the exception of China Eastern on this slide. And the same is true of all of the big three carriers in China. They all saw a fall away in their schedule in Q1. And then as we look across the slide, you can see that those airlines which have announced, the colours are getting darker and darker as we move across the page, which shows the way in which airlines are planning to fly a more and more full schedule as the year goes by, obviously anticipating a continued demand return in demand from passengers. I'd have to say that none of this sort of assumes a sort of second wave, and obviously what's happened in Beijing recently in the last week will presumably make some of the airlines think a little bit about how much more of a schedule they're going to fly in the latter parts of this year. But as ever, it's a little bit too soon to say with great certainty what will happen. But we do think that we'll see a modest recovery throughout the rest of this year. If we then go on to the next slide, the virus has disproportionately impacted both Boeing and Embraer's order books. And you can see within this slide, particularly the MAX has been impacted. As at the end of February last year, the MAX had about 4,500 unfulfilled orders. Of those, about 10% or so have been deferred or cancelled. Interestingly, within this slide, if you look at the Airbus side, you can see far fewer deferrals or cancellations from Airbus. This is based on the reported data from both Airbus and Boeing, and obviously the aircraft OEMs have been putting some pressure on their customers, let's say, not to cancel or defer orders, and you certainly pick that up a little bit in the press, with some of the airlines being none too happy about having to take delivery of aircraft, even though they may not actually need them. So far, as I said, only about 10% of the MAX orders have been deferred or cancelled. And thinking ahead to one of the things which could really change the industry dramatically, if Boeing is unable to recertify the MAX, and if indeed we see all of these orders cancelled, or an increasing proportion of them cancelled, then that's something which I think really could change the industry if Boeing has to launch a new aircraft. But as things currently stand, we see the continued pause in the launch of new aircraft. And simplistically put, I think Airbus doesn't have a need to launch a new aircraft at the moment, and Boeing just can't afford it. So we think we'll see this continued pause in launch of new aircraft. If we then go forward to the next slide, looking at forecasts for air traffic, this is a graph of RPKs, revenue passenger kilometres. And here we have put the three different scenarios which we created a couple of months ago. We had, first of all, a rebound scenario, which is the lightest grey at the top of this, and which is now entirely unrealistic, and even perhaps a couple of months ago it was a touch optimistic. We then had two other scenarios, one of which we called delayed cure, scenario 2, and then the third was a recession scenario, scenario 3, which is the purple line here. Those assume different levels of drop in the demand for air travel, longer times to get back to 2019 levels of demand, and indeed slightly slower growth rates in the future for both scenario 2 and scenario 3. And when we compare these against the latest IATA scenario, their views are somewhere in between our scenario 2 and scenario 3. And that is indeed consistent with what we think will happen. And based on our latest analysis, we haven't yet updated our scenario 2 or scenario 3, but we continue to think the outcome will be somewhere between scenario 2 and scenario 3. If we then move forward to the next slide, and look at what that could mean in terms of aircraft deliveries. The way in which we do this is we look at demand for air travel, assess the impact that will have on airlines, what they will do with their current fleet in terms of groundings and retirements. We retire different proportions of different types of aircraft, and then look at how many new aircraft airlines will need to take delivery of in order to meet the RPK demand. Here we've split demand into narrow body and wide body, and modelled it out for each of a baseline, which is a pre-crisis projection, and then scenario 2 and scenario 3. Within this, we've also split up scenario 3 into a couple of different sub-scenarios. Scenario 3A assumes we see an accelerated retirement of older wide-body aircraft, so 747-400s, A340s, early 777s, and indeed some 767s as well. Also within scenario 3A, we assume that the airlines will be less able to fund new delivery of aircraft, and therefore the lifespan of some narrow-body aircraft, primarily 737NGs and 320ceos, will be extended a little bit as well. Scenario 3B is a different set of retirement assumptions, and that just assumes a default set of retirement profiles, typically based around age, with different ages assumed for different platforms. When we run this through our aircraft production model, what we see is in the baseline scenario for narrow bodies, a fleet of about 25,600 aircraft in 2028. Of that, about 14,100 would have been new aircraft. If we then roll that forward to look at scenario 3A, which is our most negative scenario, we see that only 7,500 new aircraft would need to be built by 2028. So a 47% drop relative to pre-crisis levels. That's not quite as bad as it might seem, because the baseline pre-crisis forecast assumed the rate increases that Airbus and Boeing were talking about pushing through before the crisis. So somewhere of the order of rate 70 for 320 family, and possibly even a little bit higher. And similar sorts of rate increases we assumed in our baseline scenario for the 737. But still, close on a 40% reduction in new aircraft demand relative to 2019 levels in the narrow-body fleet. On the wide-body side, our baseline fleet forecast was 7,500 in 2028, with 3,400 new wide-body aircraft. If we then look again at scenario 3 here, the interesting thing about scenario 3A is that within 3A, we assume the accelerated retirement of wide-body aircraft over the next 2 to 3 years. That means that once demand begins to return, more wide-body aircraft will be needed from, let's say, 2025 onwards. And therefore, the reduction in the number of wide-body aircraft being built is not quite as severe as it is under scenario 3B. In scenario 3B, we assume that many of the older aircraft, though they may be parked, would return to service in due course. And some of those, although some of those aircraft will get retired, it won't be anything like as hard a retirement process as would take place within scenario 3A. And for us, this is still one of the big areas of uncertainty over how many wide-body aircraft retire, and therefore how many wide-body aircraft will be needed between now and 2028. We plan to do an update to these scenarios in due course, but at the moment we still feel there's so much uncertainty that these scenarios give as good a range as we're able to do at the moment. If we now go forward to the next slide.
Were we breaking here?
Certainly happy to break here. And
No,
perhaps hand back to Andrew to say if there are any questions on that.
Thanks, Robert. I've got a little echo here. I'm sure we'll go in a minute. Thanks very much, Robert. Yes, we were going to take a break at that point and see what questions people had. And of course, I've got some questions to ask you as well. Could you go, Pamela, back to that last slide with Robert's forecasts on it? Great, because I think that's an important slide to help us understand what you currently think the future is going to hold with the sort of developing scenarios you've got. Do you have a view on the announcements that have been made by Boeing and Airbus in terms of their rates and whether those announcements are stable or will change? Are they sort of temporary positions to give people an order of magnitude idea? Or do you think that these big companies, including Rolls-Royce, still have a lot to work through in terms of understanding what their rates are going to be in future?
I think my concern is that the initial announcements are, as you suggest, going to be temporary and that there may be less good news to come. If you look back to previous crises, the last big downturn in 9/11 and indeed back to after the first Gulf War in 91, the initial announcements which came out from the aircraft OEMs were not the low point of the cycle by any means. And it took 2 to 4 years before we reached the low point of the cycle. So I think that there may be less good news to come. And I believe that Airbus, although it announced a move to rate 6 on A350, believe that there's a future discussion, let's say, on moving to rate 5 A350 up until the middle of next year. So the initial attempt to cling on to something like a 40% reduction may not come to pass, and that we may see slightly lower production rates in the near term over the next 2 to 3 years before the rebound comes.
If taking that as an example, some of the projections earlier on were for much higher rates for the A350, up to 15 or so. And there seems to have been a bit of a bubble if you look at some of the graphics on wide-body aircraft with very optimistic assumptions that were already being punctured slightly and at the beginning of a sort of deflation in terms of output for those aircraft and engines. And of course, a lot of the suppliers have priced their parts based on those optimistic forecasts. And if you go back to those, if you move from rate 15 to rate 5, or rate 15 projected, a bit like you were saying about the projections out to 2028 that were very optimistic, then and you, as you've got here, in fact, don't you, on your baseline scenario, then it really is quite a dramatic reduction. So on the one hand, positive or slightly less negative in the sense that some of these output numbers hadn't yet been reached. But on the other hand, for many suppliers, they've been encouraged to invest and to price in terms of some of the optimistic projections.
Yeah, and I would agree with that. I think that all of the OEMs have gone through a process of trying to push suppliers on price over the last few years. Thinking back that post the announcements on Neo and Max, there haven't been any big new programs. The aircraft OEMs have gone to compete head-to-head on existing products and competed very fiercely between them to win airline orders based on price. And then they've sought to flow those price concessions down through the supply chain. So having squeezed their suppliers very hard, as you say, with promises of rate 70, if rates in single aisle stick at rate 40 or even go lower, it is a very tough time for suppliers at the moment. And one of the big risks must be that the aircraft OEMs completely crash the supply chain. And when the upturn comes, they find the suppliers are no longer available to support them.
We'll come on to that in a minute, Robert. And in fact, that's one of the items we're going to be looking at tomorrow, where we're going to be looking at the resilience of the supply chain. And we're using that word very carefully because it means different things to different people. And a part of that discussion is how we make individual companies resilient, that we'll talk about a bit more with you towards the end of today, but also how you make your whole supply chain network resilient. Does that mean focusing on pricing? Does it mean local sourcing potentially? Does it mean identifying which are the weak points in your supply chain and trying to address those? And of course, some of the larger companies, as we'll discuss in a minute, have got ideas about how to make the supply chain more resilient to compete in the future, which involve consolidation. So there are all sorts of uncertainties facing companies in that respect. One other question for you before we move on. You've talked about the wide body and the narrow body aircraft. Here in the Midlands, we think we're largely focused, due to the dependence of many companies on Rolls-Royce, on the Trent engine series, which go into the wide body aircraft, which means that we benefited a lot from the growth of the last few years, but we're therefore suffering a little bit from this decline. Some fortunate positions on the Airbus A320 aircraft, largely because that was a re-engining and the supply chain to Airbus is pretty similar, and therefore, of course, not much effect from the MAX. But what about the other niches around the A220 aircraft, which appears to be potentially doing reasonably well, or and I'm not sure if you've been researching this area, opportunities in defence aerospace?
Yeah, I think the A220 has been doing well. I guess that when traffic is less dense, airlines would look typically to put a smaller aircraft on. A220 being a new design airframe will also be cheaper to operate than some of these older A320, 737 type of designs. And that goes back, I think, to the history of when Airbus and Boeing decided that they were going to re-engine, not replace. They felt that they could get a 15% fuel burn in re-engineing and put all the development costs, or a lot of the development costs, onto the engine companies. Bombardier went down a slightly different route with a new aircraft and got something like a 25% fuel burn improvement. So A220, as it's now called, slightly cheaper to operate as a result of that product strategy decision. The downside is that obviously when A220 was a Bombardier aircraft, Bombardier had much less leverage over the supply chain than Airbus does. And I think since taking over the program, Airbus has been taking advantage, let's say, of the scale and purchasing power which Airbus has, in order to reduce the cost of the aircraft, and that of course means reducing procurement costs. So I think A220 will do well, but it's a bit of a mixed blessing for some of those suppliers which are involved with it. On the Trent family, yes, one of the great production ramp-up stories in recent years has been Rolls-Royce, and Rolls-Royce's great success on the Airbus family, where Rolls is just about the only engine supplier into Airbus's long-range product family, with sole source on 330neo, sole source on 350, both 900 and 1000, and on 380 for the tail end of 380, very high market share there as well, thanks to the Emirates order. So Rolls has done very well in recent years, but is clearly suffering due to the absence of long-haul demand. And I think that will take quite some time to come back. All of the data we see on passenger traffic says that domestic or even regional traffic is coming back much more quickly than international traffic. And so I think it will take quite some time for the wide-body demand to come back, and therefore that will put, and indeed is putting, quite a lot of pressure on Rolls, as I'm sure everybody has seen with the share price of Rolls. Interestingly, if you look at Rolls's current share price, within Rolls there are basically three parts of the business: there's defence, there's power systems, and civil aero. Given the current share price, you pretty much could buy the civil aero business for free if you bought the whole of Rolls-Royce. And you contrast that against Lilium, for instance, the UAV startup, UAM startup, valued at $1 billion allegedly. So it's one of these interesting discontinuities in value at the moment.
No, thanks again. Thanks again, Robert. Any comments on defence?
Yeah, defence, I think, is a mixed picture. In the US, as ever, defence spending remains quite robust. Maybe it's at the peak or near the peak in the US, but given the disposition of the US towards China, which I don't think it will really change regardless of who wins the election in November. Maybe it'll change in degree a little bit, but I don't think the overall view of the US towards China will change significantly. I think defence spending in the US will remain reasonably robust. Problem for us in the UK is that, first of all, we've been hit just about the worst in terms of the major European economies by the virus, with GDP drop of, I think, something of the order of 14% in the UK. And secondly, I think we'll see a prioritisation of spending within the UK towards healthcare. So, UK, I think the position is that we haven't got much money, and what money we have got we'll spend on health, and therefore inevitably defence will suffer once again. SDSR 20 will become another excuse for a round of programme delays and cutbacks. So I'm not overly optimistic about defence within the UK. And indeed, we did do a survey based on one of the webinars we ran for another trade body last week. And there, I think overall, the feeling was reasonably gloomy as well. That trade body would have had a lot of participants from the major primes, and I think that's perhaps picking up their views and indeed indirectly what they're feeling from the customer.
So short term helping see some companies through, I think, with continuing defence projects, but not going to come and rescue the industry in the future, I think is what you're saying. One of the things that we encourage our members to do is to understand the portfolio of work that they have. And it's still surprising that we have some of our suppliers that aren't fully aware of where their product goes or who the customers are if they work at tier 2 level. But you really can do some useful work in predicting what your business environment is going to be like with the kind of analysis that Robert has been doing, and working out where you are in the supply chain and your dependence or your reliance on different parts of your portfolio. So thanks very much, Robert, for that background and introduction, which gives us some sense, not a very optimistic one, I suspect, despite your scenario 2, which we can hope for, but and your scenario 3B, even more concerning, I think, for those involved in wide body work. But that's the challenge we have in front of us. So we're going to come back to you, Robert, for some comments in a few minutes. But thanks very much for that first part of our session today. Pamela, do you want to go to my slides on our survey? Oh, while Pamela's doing that, Robert, Lars has asked if your slides are available. Do you have a version of your slides that you make available for people who attend meetings like this, or is that difficult?
Yes, of course. I'm very happy. I will either send you a PDF after this, or indeed perhaps the PDF I sent you last night will be suitable.
Okay, grand. In that case, Lars, we can send it out to everybody who participated in the meeting after the meeting, if that's okay with you, Robert.
Yeah, absolutely.
So super, thanks very much. So just changing tack a little bit, Robert's given us a high level view exactly as we needed to understand the overall context in which we're all working. As many of you know, I've been doing some more detailed work, if I can put it like that, on the ground through our survey and talking to people of what this big picture translates as for our typical MAA member companies. And I want to take you through a little bit of what our survey showed us, and then have a little look at what a survey that some other consultants from Ernst & Young have been doing, which is very interesting from the finance viewpoint. So you can understand a little bit about what your peers are thinking about finance. And then I'm going to talk a little bit about cash flow and capital matters that I'm picking up on the ground, not very theoretical or high level, but some facts that I think could be interesting. So if you have any questions, as Pamela said earlier, do use the chat box to say I'd like to ask a question, and then Pamela can bring you through to pose that question. Pamela, I'm looking at the slides on full screen here to be able to read them properly, so do interrupt me if you need to, if any of our participants have got any questions or points they want to make. I may or may not see that coming up, given the view I'm looking at. So next slide, please. So the companies that we surveyed were a good mix of MAA members, and they are therefore pretty representative. Over 50 gives us a reasonably scientific sample. It's 20% or so of our members, but also the right kind of breakdown of where we know our members are in terms of their specialism, whether they're systems integrators or technology suppliers, build-to-print manufacturers or specialist service providers. A lot of our core market and the core work we do in the MAA is in that green group of build-to-print component manufacturers, because they are the heart of our supply chain, supplying the bigger companies, and are also the market for many of our specialist service providers and their materials producers. So it's all connected up there. Next slide, please. So here is the results of us asking our members about what they expected their financial situation to be in 2020 compared to their plans for 2020. Many companies had predicted continued growth in 2020, as Robert alluded to, some of them 20 or 30%. So in many ways, these forecasts tell us what those new plans will be compared to the original forecast for this year, and it's an average of around 40% reduction in revenue for the year across our members. Some of them in a considerably worse condition than that, particularly some of our service sector companies, which saw demand fall off very quickly in late March as projects that they were planning to start were stopped or delayed. Whereas for some of our manufacturing companies, those changes have come through later in the cycle. Next. And if we look at what that would mean for output and activity during the current year, a 40% revenue decline, giving us about 60% revenue for 2020, could look like this. So this is an ideal model that I just graphed, because that 61% could be composed of 100% for the first 4 months, and then a slowdown, and then really quite a low level of activity throughout the rest of this year. So although it depends upon what your portfolio is, and this is an average, if you like, across the industry, on average our companies have been very badly hit by the declines in the order books, or reductions in the order books, that have come through in the last couple of months or so. Next. And asking our companies how they anticipate revenues to change in 2021 gives us this result. I'm not sure whether people know or are confident in this kind of forecast, or if it's a hope that people have, as this is what they expect to happen. I suspect those who are on the green or the red are those who have more certainty about how the market's going to develop, and those in the yellow and the orange colour are hoping that the bottom will have been hit in 2020 and we'll start to get some small improvements in 2021, which we won't really know until the longer term order books come through, although we can use the numbers that Robert was giving us to give us a pretty good idea that we may be at the bottom of the market throughout 2021 as well. Next. We then asked our members to give us some idea of their priorities for the current year and for next year. And the issue that we discussed yesterday around people was the clear top priority for the current year, and therefore we spent some of our session yesterday talking about making sure that workplaces were going to be safe and productive for people to return to work at, talking about social distancing, new patterns of work, new physical systems in terms of barriers or testing booths and so on that our companies had put in place. So a key issue for companies very early on, and actually has led to some questions about competitiveness and productivity that companies will need to answer in the next few months, and therefore will affect their financial performance if, for example, some companies have had to introduce another shift. On the other hand, if the changes in social distancing that the government is beginning to announce keep coming through, it's quite possible that our workplaces will be able to return to normal in that sense, although with the lower volumes that will create issues for people who have invested in new production or anticipated new output, and therefore have a gap in their capacity, which will create challenges for them with the price pressures that we've seen. But finance came in the middle here. Slightly to my surprise, I expected it to have a higher level of interest in terms of priority for our members who are already thinking about new business creation, I guess. And if we look, Pamela, at the next slide at 2021, quite a surprise to me in this one. So Robert, we haven't planned this, but if you've got a thinking cap, you might need it for this one. I'll come back to you in a minute on it to think about why it might be. It could be those who are answering our questions, but in general, companies are not expecting finance to be a key issue in 2021, and we could speculate perhaps as to why in a minute. Next. So if we compare those two graphs that we've just seen for 2020, only 10% of the respondents making finance their top priority, and only about 2% making finance their top priority next year. And it's a very interesting finding. I really don't know the reason for this. It's possible that companies have good, robust plans to make sure they're resilient. It's possible that 2021 will be a period of low and stable activity, and issues will have been addressed. It's possible that our companies don't fully understand perhaps what lies ahead of them, and therefore find this difficult to answer. But we'll come back and look at some results that we got from Ernst & Young, or that Ernst & Young have shared with people, and there's something interesting there which is correlated with what we see here. Next. If we compare the different types of companies that we spoke to and look at finance again, the second set of bars here, the different kind of companies didn't really vary in terms of how they prioritized issues. So we didn't see that one category of company is answering the question very differently from any other category of company. So finance is number 3 in 2020 and number 5 in 2021 for all 3 of our groups. Next. And then we asked our companies within the finance category, and we particularly looked at cash flow here. We gave them some categories, if you like, or detailed ideas about what they require to improve their own situation or to reduce the difficulties that they face. And these were the answers that we were given. These are choices that we gave people to choose from, and they've therefore ranked them. Interesting that customers paying on time comes up number 1. I tend to think that is because it is a real concern. Otherwise it wouldn't be raised, but I'd be interested if people have any feedback on that in reality. From the conversations I've had with member companies, it isn't yet an issue as such, but there is an issue about payment terms being changed potentially, and it's possible that there will be difficulties that companies have, particularly if some of their own customers in the middle of the supply chain begin to run into issues of cash flow of their own. This may flow down, and this chart here may reflect the concern that people have. If we look at the last of these items, cost down agreements, we did have some pressures that I'll come to in a minute from at least one of our main companies to reduce prices quite early on in the crisis. But I think what this shows us is that that isn't necessarily widespread. We did wonder if that was widespread, and some of the conversations I've had with other suppliers to that large company, they showed that those other companies hadn't yet faced that kind of question of the larger company looking for price down, and it's possible that that is reflected in the numbers that we've got here, that this isn't particularly an issue. The middle two categories are really about the kind of support that we can make available in terms of loans and financial support that might come from the government or the financial institutions. And the second one here reflects a moral, I suppose, or a political or ethical question that companies have. And they see sometimes that aid in aerospace goes to large companies, not to small ones. That could be R&D, or it could be launch aid, where the so-called trickle down really is nothing but a trickle in some cases. And many of the supply chain companies are concerned that if the government is going to support BA, British Airways or Rolls-Royce or Airbus, that they also support their own supply chain in the UK. And there's some evidence that there's a bit of a bifurcation going on here, as I'll come back to later, where companies receiving support from the government are not necessarily supporting the UK supply chain. But again, that could be a little bit of evidence, and we haven't seen that generalised yet. One of the things we're interested in the MAA, and I'd be very interested in people's view of this, is the third category that we've got here: long-term loans repayable based on sales. Loans traditionally related to capital, or based on equity, or equipment that loans have been based on. And there's something interesting here in terms of the value of contracts in aerospace, which the financial institutions in the generally speaking in the aerospace industry haven't valued contracts. But there's something interesting about repayable launch aid, as it used to be called, or launch investment for the large companies. And in fact, the Institute of Directors and the British Chambers of Commerce have raised this question with the government more recently, a form of finance that looks more like a student loan. That is, that it's repayable based on your revenue in future. So we've raised this as a potential new instrument that the financial institutions might develop, potentially with government support, to see if it has any interest. And I am speaking to people about this. Whether we can make it happen or not is a different question. But it doesn't currently exist on any scale, at least, and could be something useful for us. Next. If we look at the detail of the results of our survey, and we asked companies what other financial matters were of importance to them, then a critical idea here was again about the large companies and their behavior with respect to payment terms, prices and so on. So this is the words that people actually gave us that I've just pasted in here. And there is therefore a concern, as you always get in the aerospace industry, about how customers will behave in the tight relationships that suppliers have with those customers, and whether they will actually pay on time, or whether they'll change their payment terms and so on and so forth. And in particular, what suppliers are asking for is better visibility. And that's visibility, of course, not only in terms of payment, make sure that those are on time, but also schedules and order books, because planning and payments in such a high-tech industry are often not as advanced as people from outside the industry might think they were. Next. And then our respondents were interested if there was government support for the industry through financial instruments, in making sure that that was actually connected to policy. So it wasn't just the French are giving their companies money, we need money for our companies. It was much more sophisticated from our respondents to ensure that any financial support that was given had a quid pro quo, had some responsibility on the part of the companies receiving the aid to act in certain ways, whether it's enhancing their capital spend or investing in productivity, or it's making sure that growth was going to smaller companies or innovation. Next. So other than that, not a lot of other ideas. So we think we covered a lot of what our members are thinking in terms of finance, making sure that they get paid on time from their members, from their customers, I should say, making sure that any government support was appropriate in terms of ensuring that the large companies support the small companies, or had some element of policy to guide it, as opposed to being what we might think of as some kind of handout. So Robert, that was the results of our survey, and I'd really be interested if it rings any bells with you in terms of what you're hearing, or from the lower tiers of the supply chain, or whether this matches what you see in the high tiers of the supply chain.
Yeah, I was interested in 2 or 3 points from your survey, but first I just wanted to pick up on one of the things you said right at the end of the previous section about the importance of a balanced business portfolio. I mean, I've always felt for suppliers, the thing that you want is a portfolio which is balanced across civil and defence, across OE and aftermarket, and across new and existing programs. And if you have a portfolio which is balanced in each of those 3 dimensions, you're then hedged against the worst of whatever may happen. Now, an alternative view is that you're just going to take a big bet on something, and you're going to gear into the Rolls-Trent family of engines. And that would have looked great for the past 3 or 4 years, but obviously it's coming rather unstuck now. So you can take the big bet approach to life. I always think this balance, civil defence, OE aftermarket, new and existing programs is a much better strategy. And that's what I would recommend for companies and suppliers within the MAA, in order that you just don't get caught out by any of the bad things that can happen within a notoriously cyclical industry. In terms of your survey, trying to think where to begin. Near the beginning, you said that some of the service providers were impacted early on.
Yes.
And that's what I would have expected if they're involved in MRO, because anything in MRO always gets hit first. As soon as airlines ground aircraft, any maintenance which is triggered by flight hours or flight cycles just doesn't get done. And indeed, airlines typically ground aircraft as soon as you hit a heavy airframe check or an engine overhaul, which are both very expensive events. So again, doesn't trigger the demand through the supply chain. So your service providers being hit first, I thought, yeah, that's what I would have expected. Your 2021 sort of slight upturn, I did wonder whether that was slightly too optimistic, but
yes,
that's quite interesting. And your graph of what 61% revenues might mean throughout the year looked pretty terrifying to me, particularly the second half of this year. So I mean, I certainly hope that doesn't come to pass.
I think a lot of companies in a big company supply chain are expecting that in terms of the drop off in the order books, that it'll be pretty rapid, and it's coming through pretty rapidly now. As a big drop off in, they were slow to make any changes to begin with, as they often are. And then the change they make is off a cliff edge, basically.
Yeah. And you, if you're a supplier, you get in this very bad position where you've made deliveries into your customer who has lots of inventory of your parts, and therefore won't pay you for any new deliveries. And at the same time, you have to make payments out of the door to your sub-tiers, who you may have ordered components or services from at a time when you thought production rates were increasing. So there has been, I think, in a number of cases, very strong squeeze on the cash flow of some suppliers.
So, no, thanks very much, Robert. I'm going to move us on a little bit. If we could go back to the slides, Pamela. What I wanted to do is just show you some slides that our friends at Ernst & Young or EY have created. If you want these, find them and contact them, and I can put you in touch with them if you like. So I have borrowed their slides, and they're very interesting. They're doing a survey, and if you speak to EY, you can participate in their survey and potentially get the results as well. So next, and a monthly survey, and it produces some interesting benchmarking information. When they compared May to April, they found that the real focus of everybody was on operations expenditure rather than capital expenditure, which was the focus in April, and in reducing operations expenditure, I expect. And then if they looked, when they looked at the support that companies were getting from various stakeholders, shareholders, the owners of the company, for example, were giving companies the most support, followed by their suppliers. We did wonder if their suppliers were doing this willingly or not, but it could be that deferring payments to suppliers was support from them. But very interestingly, little support from the debt provider community. So companies in the aerospace supply chain not feeling that they're getting support from financial institutions was I think, particularly interesting here. And in terms of customers too, a mixed picture with companies in some cases believing they weren't getting any support from their customers. I think that's what we might have expected at this particular point. Next. And then they have a very interesting graphic that lets us benchmark the current and potential future situations of companies. At the top in the grey and the blue there, they're looking at the immediate situation and what people's priorities are in the short term. Companies perhaps spending less of their time on those priorities in May than they were in April, the change that Robert talked about from one era to another, perhaps in the crisis itself. But a lot of concern over finance, over liquidity, over operations expenditure in the short run. But rather like our result from 2021, again, intriguing to look at with finance being less important. When companies are looking at recovery and resurgence, barely a squeak about money. So something I want to look into, why our members are not concerned over finance in the future, according to our own survey or the Ernst & Young survey as well. So next slide. So just a few issues before we go back to Robert. What I'm beginning to pick up, interested in your own views, and I'll just go through some of these briefly from my own empirical discussions on cash flow and on capital. Order book drop-off, absolutely severe in many cases and still hasn't come through in others. A company that is supplying Rolls-Royce through one of the Japanese companies still may not have a new order book by the end of June because they're slow in making their decisions. And the risk there is that it's pretty much a drop-off cliff edge, and the well-known whiplash effect of magnification of the changes down the supply chain that puts more stress on companies. Payment terms, I did wonder if the fact that payment terms are often quite long in aerospace was giving people a cushion. I think that depends on whether they do invoice factoring or not, and I understand that's pretty widespread for some companies, and they therefore are turning those 90-day payments into immediate payments anyway, and therefore are not going to benefit from their long payment terms. There are some questions over whether some of the customers are changing those payment terms. I'd be interested in getting some results or ideas from you on those. A difference between some of our large companies which are managing themselves by the numbers, and we can use the SPS Technologies example, part of PCC, which is managing by the numbers and simply reducing the number of employees by the proportion of the revenue reduction. You can see that pretty clearly across their sites. Many of our smaller companies taking a much more active view of managing their resources, including their cash. And a number of them have actually built up quite large cash reserves, I'd noted. Something that was frustrating some of the larger companies during the growth period, the reluctance of many of our small companies to invest and to borrow, in fact. So an interesting phenomenon. It wasn't necessarily that the banks weren't lending, it was that our companies didn't want to borrow. So something interesting going on there. And of course, all those companies saying, told you so right now, because they're pleased that they've got those cash reserves ready for a downturn like this and to remind them why they built them up. Not clear that our companies in the supply chain are making much use of external borrowing facilities. Again, I'd be interested in views on that. I don't hear much about it. If there are issues here in terms of overdrafts or a use of government financial facilities, again, not much evidence either way on that. But there's clearly a race to survive out there, to be the camper that doesn't get caught by the bear when the fellow camper does. And clearly the cash flow elements are one of the triggers that will drive a company insolvent potentially and cause it particular issues. And we are seeing price cut demands in some areas. The more we've explored, again, we're not sure that's widespread, as I said earlier, but that's putting additional pressure on companies when their customers have asked for price cuts, even in the current situation. And we've seen some evidence, we think, of a large company looking to move work out of the UK potentially to resource to reduce prices further. We're still looking to see if there's more evidence on that, but it's clearly price based and includes potentially moving work to China, which is pretty interesting in its implications in the current environment. Whether that's the policy of the company or is the activities of procurement teams, it isn't entirely clear. And finally, the main concerns that procurement managers have is over the upturn and whether our companies will have enough working capital for the upturn when it comes. That is a traditional issue in this industry. The big companies recognise that, and their procurement managers are concerned about it, but it's not always clear, is it, that those concerns get reflected in their real behaviours. And that's something of great interest. We see these contradictions, it seems, in how our large companies behave. And that's one of the challenges that our supply chain companies have to face every day. Next. In terms of capital, clearly there are issues over the future of companies that come into difficulty, and there are also opportunities, and some of the large companies see it, to create more consolidation. In a crisis period, the big companies often look to consolidate the supply chain. It's subcontract manufacturer for the most part at the moment, and historically that's the culture and in our supply chains, and that has led to a very fragmented ownership of our supply chain companies and very varied types of ownership that I've listed here. And that creates difficulties again for our aerospace customers. They haven't seen the rapid consolidation and concentration of capital that the automotive industry has seen, for example, and that frustrates some of the big companies who desire that kind of consolidation as an impact or a result of the current crisis. And yet there's another contradiction, of course, because if the supply chain companies become too large, whether they're Precision Castparts Corporation or Collins Aerospace, then the large companies find that frustrating because they lose their bargaining power. So they're looking for some middle ground here, which is pretty difficult to achieve. But these are the kind of changes I think we'll be looking at over the next few months, in which all of our owner managers and shareholders in our small companies will be concerned to make themselves resilient against. And some of their customers will be looking to try to trigger, because they believe larger companies will be more efficient, have economies of scale that can protect them or enable them to invest in the future. So that's a little bit of feedback on the kinds of things that we saw going on in the conversations that I've had. Next slide. Just to let you know, and we've made some of our companies that were involved in one of our workshops aware of this. A few days ago, we ran a workshop with Grant Thornton, and we looked at the kind of offers that were available to members from Grant Thornton, which is, it's a great offer. They're offering complimentary workshops to members of the MAA. And won't just be about the financial issues, but I thought a good opportunity to remind you of this. If you're interested in talking to some experts and getting some feedback, contact me. You'll find my email address on the front page of the MAA website. We talked about Grant Thornton having an offer to our member companies, and there are two others we want to talk about from the finance viewpoint. A really interesting program to support companies in the aerospace and other sectors, run by the University of Derby, and we invited Nic Thompson to come and talk about this to us and give us some ideas about how we can use this kind of support. So over to you, Nic.
Brilliant, thanks Andrew. Hi everyone, my name's Nic Thompson. I'm the Senior Project Manager on the Investor Grow programme. As Andrew says, it's run by the University of Derby. We're quite a long established programme now, so I imagine some of you might well have heard of us and possibly even applied for funding from us in the past. I've kindly been allocated 5 minutes just to give you a bit of an introduction to the programme and some of our key criteria. So moving on, so the scheme focuses on projects that are seeing companies wanting to grow, innovate or adapt their offering or processes, with our main output requirement being the creation of jobs and possibly even the safeguarding of existing positions where we deem there to be a strong enough justification for that. Projects that apply to us must be based in the East Midlands region, so we cover quite a large area, and by projects being based there we mean that the assets that are going to be purchased or the jobs that will be created or safeguarded must be based somewhere within the East Midlands. We do primarily focus the funding at SMEs, but that doesn't rule out large enterprises, and we have in the past and continue to support large companies. The only thing with large enterprise we find is it can sometimes be harder for them to justify why they need the funding support from us. But provided there is an argument for that, we certainly can consider applications from large companies. We look at the priority sectors that are focused on by the local enterprise partnership in your region. So across East Midlands, particularly Derbyshire and Nottinghamshire, that very much covers aerospace and the supply chain. The projects that we support are very much kind of predominantly capital expenditure focused. So looking at property purchases or adaptations, changes, fit out to existing plant and property, maybe machinery purchases or equipment purchase, that type of thing. I say mainly on the slide because in certain scenarios we can sometimes consider revenue costs, so things like new staff costs or consultancy fees, but generally speaking that focuses mainly on the research and development type projects rather than just kind of covering all the types of projects that we fund. We're not really here to support companies with their staff costs because we see that as being something that the company should be funding themselves. We continue to market ourselves as a predominantly loan scheme, but that's not to say there isn't grant funding available, and there absolutely is. And very much kind of the bread and butter type of awards that we do are a combination of grants and loans. We find that obviously most companies want grant funding, which is as expected, but those that have taken loan funding have actually on the whole found it quite useful because not only do our loans come at quite a competitive interest rate, they also can be released before companies have spent any money on their project. So it can help with cash flow and things like deposits on machinery. Whereas grant funding is, I'm sure you're well aware, it comes after expenditure. So once that has been evidenced to the scheme, the grant funding is subsequently released. The scheme now is in the stage whereby we've drawn down all of our funding from government, and we're very much self-funded from the loans that we've awarded previously to companies that get repaid to us on a month-by-month basis. So we have to pay quite close attention to our cash flow, and obviously that's something we're always considering when inviting projects forward to submit full applications. However, we are still very much open for business. There still is a good amount of funding available in the scheme. We are a rolling programme, so we don't do particular calls for applications. We're constantly looking at new projects that are suitable to apply to us. In terms of the amount of funding that is available, as it says on the slide there, the minimum award size is 15,000, which you would need to be looking at a minimum expenditure of around 50,000 to comply with that, and then we can do awards all the way up to £250,000. Obviously, a good chunk of that is likely to have to be as a loan funding, but there's also grant funding within that as well. And businesses generally have to contribute 70, maybe a little bit more % of their project costs themselves. So Investor Grow normally does up to 30%, and then 70% comes from private sector sources. So that can be company funds, director investment, bank loans, asset finance, that type of thing. The final thing I want to say on this slide was that the scheme works on a two-stage application process. So we look at first at the submission of a kind of high-level expression of interest, which focuses on kind of who the company is, what the project is you're looking to do, the costs and how much funding you're seeking. And then the team will look at that and let you know if you meet our criteria and how much funding you might well be able to access, before then inviting you forward to submit a more comprehensive full application. We have in recent weeks seen quite a surge in new applications and interest in the programme. We've seen a lot of companies either bring forward investments or potentially even change their investment plans as a result of coronavirus and everything that is happening in the markets at the moment. So it is a competitive scheme, and we are looking for those projects that create jobs. But if you feel that you have a suitable investment, or even if you want to discuss potential projects with me or another member of the team, then I would encourage you to obviously get in touch or look on our website, which has quite a lot more information about the programme and the frequently asked questions for you. Pam, if you can just move on to the final slide for me. It should have some contact details on there for you. And also there's a screenshot there taken from the homepage for the Invest to Grow website, where I've just circled where you can download the expression of interest form, the contact information, and also you can download the frequently asked questions document as well, which gives you a lot more information about the scheme and other key bits of information for you to be aware of. So unless there's any urgent questions, I'll hand back to you, Andrew. Thank you very much.
That's fantastic, Nic. It's good to know that the university is running this scheme, and I think you told me earlier that it comes from the Regional Growth Fund, which was started by the coalition government several years ago. Right. And because you've kept that alive and you're recycling the funding from that, you have this opportunity to match fund investment projects. And maybe that's the kind of funding I was talking about, revenue-based funding that people can talk to you about in terms of the upswing and how they can borrow to help them invest in the upswing when it comes. And see if you're able to support them there.
Yeah, absolutely. I'd always encourage people to pick up the phone or drop me an email. I'm happy to talk things through with them.
Great. No, thanks very much, Nic. That's absolutely super.
You're very welcome.
So, Pamela, why don't you put up Christine's slides, and I'll just look at some of the chat while you're doing that. We had a comment from Mark, who wondered if it was legal for large companies to mislead small companies about potential volumes. Probably is, because they're just forecasts and they are not committing themselves to that. It's just that I know from most conversations I have that people take these forecasts with a pinch of salt, because they're used in price negotiation, promising large volumes to beat prices down, and companies are often quite skeptical, as we can see why, as to whether those prices will those volumes will be achieved, and therefore whether the prices are realistic or not. So over to you, Christine, to talk about the grant element in particular of the support from the Aerospace UP programme.
Yeah, thank you, Andrew. Hello again. Picking up from the introduction I did earlier today, we thought it would be a good idea to give you a picture of how you access the monies that we have available through the grants in Aerospace Unlocking Potential. So as I've said, we have a pot of 5.4 million that we want to hand out. And these will go to SMEs that are located in the area on the map, in those 8 local enterprise-ship areas. If you're an aerospace supply chain company, that's great. You come and participate. But if you're a company that's not in supply chain but interested in diversifying into it, you're just as welcome to be part of Aerospace UP. And I'd also like to invite all the service companies that are out there. So you don't have to be only a manufacturer to access these grants. If you're a service provider in the sector, there are certainly projects that we think you could also be doing. So do have that in mind. Again, just stress that the program supports innovation in all aspects of your company. So if you're developing a new technology, a process or product that is new to your company and that somewhat supplies into the aerospace supply chain or diversifies out of it, those are all projects we can look at funding. If I could have the next slide, please. So the next slide basically breaks down the process that you'll be going through to access the monies. The way we're going about this is really to make it as flexible as possible for you. So there are no deadlines. We'll have rolling calls so you can submit projects at any time. 2-3 steps in the processes. So you'll initially be asked to do an expression of interest where you map out the project that you want to do and the value you think it will take. So we're not setting any caps here, except for that the maximum that you can ask for are £100,000, but you're free to suggest any value that will help your company. And so at this stage, you'd basically, the latest, you'd have a technology manager assigned to you to help you, just develop the project, and they also will assist you to draw up the full application. And yeah, once you are ready for the full application stage, you basically are fleshing out what you've been working on anyways in the EOI. You'll be asked to add more schedules to it, a detailed timeline of the spend and financial breakdown, and also a bit of a business case around why this funding is going to help you and what the benefits for the company are going to be. And then really depending on what the value is of the grant you're requesting and how complicated the project is, there will be a few routes in the assessment. So if it's a substantial grant, we would like to invite you to present the project in front of a technology board who are going to evaluate what you're suggesting. If the values are smaller, we might peer review them through industrial members. And if they're rather small, in the thousands, for example, then that will be taken care or assessed through the university and the MAA. Once everything went well, you'll receive a notice of success and sign a grant agreement with the university. This agreement will include start and end dates and schedules for the claims. So as Nic has pointed out earlier, with grants, the way they work is that you spend first and then you claim the money back that we support you with. If I could have the final slide, please. Thank you. So yeah, this is a list basically, not finite, of things you can spend monies on. When we look at the grant value, that's the amount of support you can receive towards your project. And there is going to be a different intervention rate depending on the region that your company is based in. So we're looking at something between 40 and 50%. So you will be evidencing 100% of what you've spent, and then the university will refund you, for example, 40% if that was your intervention rate. So yeah, if the grant funding is something you're interested in, I'd highly encourage you to come to our session on Friday, where we're going to have where we will be focusing on innovation projects and give you loads of examples of the kinds of project you can do. And I'm sure there will be a few amongst them which you haven't really thought of. There's really a lot you can do within the scope that we can fund. And so do come on Friday. Any further questions, post them in the chat box. Hang around a bit longer because we've already reached the end of the event time for today, and happy to have a chat about this with you and to follow on conversations. Andrew, shall we wrap it up?
Yeah, no, thanks very much, Christine. Time flies, doesn't it?
Yeah.
So in every case.
And I think there's still a few comments in the chat that are quite interesting. We should pick up on that.
There are, aren't there? So we do understand that some people need to leave, but we found with a number of these sessions we've talked a little bit longer than the hour and a half we had. So do stay with us if you can while we look at some of the chat. And then I think with Robert, what I want to do, Robert, is just have a look at that graphic that you've got with the different kinds of support available from different countries, and we'll focus on that, because actually you'll focus your graphic on the opportunities for companies to think about their strategies at different times of their cycle is something we can take up tomorrow, I think. So Mohammed had an interesting point about why finance was less important than expected in the future. Mohammed, do you want to, if you're still there, do you want to just tell us the point you were making there?
Yeah, I mean, it was just, hi, Andrew.
Hey, Mohammed.
I've done quite extensive research on SMEs and on the supply chain, especially from my experience with Airbus as well. So a number of the small SMEs and businesses in the UK are, especially the ones below revenue below 100 million, often have very low level of debts or long-term liability. So they can manage within their means to ramp down as needed, and often that will come at the expense of employees. I think we have seen people reducing their employees by 40%. So in my view, I don't think they are in desperate need of cash for their commitment, but they have commitment for short term, i.e. paying their suppliers, etc. Being the cash conversion cycle, so it takes about 80 to 100 days sometimes to get paid from Airbus and their customers. So they just need to fulfill their current liabilities, but they don't have long-term commitments or long-term debts. And this is often family-owned businesses or businesses owned by private owners and not owned by larger corporations or private equity for the same.
So I think you may well be right for the downturn, and that's why people think that if they can get through this next few months, then they'll be okay. And you're right, they cut their variable costs in terms of people, and their debt repayment schedule is not very great. What I'm interested in just as much, though, is whether they're therefore confident about being able to finance the upturn, or whether they're thinking about the upturn yet, because it's a traditional problem that we have in aerospace when we come to that phase.
I'll borrow a comment from Tom Williams, and I share it with him. We've seen a lot more supplier goes bust when we're ramping up than we're ramping down.
Yeah, no, exactly, and so that'll be interesting to note. At least we'll keep an eye on that, I think, and see what's going on. So, Robert, then let's come back to, it'll help us answer Darcy's question about government support, and then we'll finish there. So do you want to move on to the next slide, Pamela? So just give us a broad indication, if you could, Robert, of how you see the types of government support that companies are getting in different parts of the world.
Yeah, okay. I'd probably just draw out, I think, 4 examples from this page of different types of government support: US, China, France, and Germany. US is interesting, $61 billion allocated under the CARES Act, the Coronavirus Aid, Recovery and Economic Security Act in the US. And that's split roughly, I think, 32 billion or so has gone to in payroll assistance, mostly to passenger airlines, a little bit to cargo airlines, and a little bit to airports as well. And then 29 billion in loans, again, mostly to passenger airlines, with a little bit to cargo airlines. And there's been very clear, funding dedicated to support the airline industry. And at the same time, within the US, we've seen some discussion of acceleration of defence procurement too, and talk of the DPAS Act, the Defence Priorities and Allocation Scheme, to make sure that US defence contractors are able to deliver components and equipment which is due, and are doing so despite all of the health concerns around the virus. So the US has put a lot of money behind the airline industry, at least so far, and also into defense. China is, for me, very interesting. When I talk to my colleagues in Beijing and Shanghai, China views the current crisis as a fantastic opportunity for China to catch up and to try to accelerate the development of its own industry with the C919. So they think that with the current slump in demand, if they can accelerate the development and certification of the C919, it'll be ready to catch the upturn when that comes. And if you think that 30% of narrow-body demand or so is in China at the moment, and presumably the Chinese airlines will just get told to buy the C919, that means that 30% of future demand could be taken by COMAC, which then leaves Airbus and Boeing fighting even harder than ever over the remaining 70%. So if China manages to achieve its ambition, it could be quite a major shift within the industry. Within France, France is, as ever, much more strategic than the UK when it comes to supporting its industry. And one of the reasons is obviously that France has a major aerospace industry. And indeed, aerospace is one of the few industries which France has left. Think of the UK. We don't have many industries left in the UK other than aerospace. French seem to be much better and much more forward in terms of thinking about how to support that industry than the UK has been so far. France dedicated 17 billion. I think that's in the form of 7 billion loan package for Air France, and then a set of other measures, either to support suppliers or to support consolidation of suppliers, or to fund research into green aircraft technology to try to put France at the forefront of new sustainable aircraft development. And then the final one would be Germany, where my colleagues in Germany have been working on, first of all, the funding required to support German suppliers, typically tier 2, tier 3 suppliers in Germany. And then Germany is also thinking very hard and quite strategically about what's the future role of Germany within a globalized aerospace industry, and what could be an appropriate blueprint for German aerospace industry in the future. So Germany, again, taking quite a strategic approach, and not an approach which we have seen in the UK so far. Much more, where the industry has been supported, it's been much more as part of the furlough scheme, which applies to all industries, for instance, rather than for specific measures which apply to aerospace per se.
Yeah, and that's been the response. It's been the response of the government, hasn't it, Robert? That when our industry has asked for more help, specific sector-focused help, the response has been, we're giving industry a lot of money generically. And I think that it's an interesting measure of the capability of our current cabinet on the one hand, but also of the sort of place that we've got to, where we need a very strong Secretary of State, like a Vince Cable, to actually make it happen. If we don't get that strong Secretary of State, we don't get much of an industrial strategy in these areas. So it's not really built into the system anymore, as far as I can see.
And interestingly, in one of our surveys, we asked companies about whether government was doing enough, and 80% said no. And we then asked, well, what would you like to see government doing? And the number one answer there was not more money, but develop a strategic plan for the UK aerospace industry. So people were not asking for more money, just asking for a bit of vision and a bit of clarity and some leadership from the government, which sadly, as you say, we haven't yet seen.
Yeah, to help them make their own plans, of course, and give them more confidence in the business environment and in industry like this. So Robert could have talked to us more, and we'll have to have him back, of course. We've got Aerospace Up Hour in future and lots of opportunities to continue these discussions. As I said earlier, we'll be talking about resilience tomorrow. So some of the things that Robert and I were going to talk about in terms of the life cycle, or the crisis cycle, if you like, and the response of companies at different stages, we'll look at tomorrow. We might ask Robert if we can borrow his slide to help us with that. But thanks very much, Robert, for joining us today. It's been great to have you with us and helping us understand the state of the crisis as it's unfolding and your views of where we're going there, and also to help us interpret a little bit of what MAA members are seeing in terms of their finances and what our friends at Ernst & Young were finding out in the supply chain. It's very interesting to get these direct reflections, I think, of what's happening in the smaller companies in particular, and compare them to the bigger picture that you were able to present. And thanks as well to Nic and Christine for talking about some of the support that is available. It may not be necessarily directly what people want, but sometimes if managers are clever about the way they look at financing and they organise their affairs well, this kind of support can add a great deal to a company's financial ballast. So thanks again, Robert, and thanks everybody for participating today. Look forward to seeing you all tomorrow.
Well, thank you very much for the invitation, Andrew. I'd say if there are topics that people want to cover which we've not had time to do so today, then please feel free to drop me a line and I will respond.
No, will do. Thanks very much. One of the fun things at the moment is that it's possible to get great speakers at short notice, and not that you were short notice, but but for short presentations, because you can drop into a meeting, can't you, with when it's on Zooms or Team, and do half an hour and and everybody's done a great job. So we may hold you to that. Thank you.
All right, great. All right, thank you.
Yeah, thanks a lot, Robert. And anybody else that wants to stay and chat, you're very welcome to. Robert did say we'd be able to make his slides available. So what I propose we do, as I said earlier, Robert, is for the people that signed up to this meeting, we'll send them out to them, and they'll benefit from that, I think. We'll also perhaps talk with Christine and Nic about sending those slides out as well. That could be very useful after the meeting. We haven't been intending to circulate the MAA survey results. We haven't been asked for those yet, really, and we can have a think about whether we do that too. So thanks everybody for joining, and if there are any questions or points that people want to make, we'll hang around for a few more minutes and then see you tomorrow otherwise.